The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, my darlings, this is Esther Gulius, the tax lady, and we're here to talk taxes. We're going to keep you up to date. And I know with everything going on with Afghanistan, you kind of have like a split allegiance. You're thinking, oh my gosh, what's going on there is so terrible. And it is, but it's like death by a thousand swords. You just keep watching it and watching it and watching it. But anyway, I'm joined in studio with Christopher Fabian. Hey, Chris.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey, Esther, happy Saturday.
Happy Saturday. You know, it's been a wonderful summer, hasn't it?
Oh, this
if you had a pool, this was your year.
Yeah, this is like July weather right now. I'm afraid for winter. I hate to say that.
Don't say that. Don't say that. You know, because for the last two winters, every day, I get up in the morning around 5 o'clock and I walk 3 miles a day. And I have a treadmill in my apartment. And but the last 2 years, except for 2 days for the last 2 years, I've been able to walk outside because it's been so great.
Right.
So don't say that. I love I love it when
I know.
so much. All right, so we're going to talk about things that are extremely important to you, and we're going to talk about where your refunds are. Maybe you've been getting refunds and you think, oh my gosh, I got too much money. You saw Chris on TV this week talking about her too much money. Yes, Tiffany.
Oh, the tax school is starting September 16th, and so don't forget to register. You can go online to egtax.com or call our office. It's a great opportunity to learn taxes from A to Z, and really the hope is that you would work in one of our 32 offices after you are successful with the class.
Right. So our tax school is starting in September. We have two flights, a September flight and an October flight. So go to our website at egtax.com and you can register for school. Okay. So, Chris, you were going to talk about why are people getting too much money?
Yeah, so a couple weeks ago.
If they get money.
Right. We started getting a lot of phone calls at the office. I think I received my unemployment money, but it seems really high. And and we said, okay, well, go through, get their name, look it up. And we say, yeah, you got an extra $500 or you got an extra $2,000. And no one could figure out why. We made phone calls. Nobody knew anything. So during the week, figured it out. It was for married joint filers who were getting extra money for the unemployment. And then I looked a little bit more, and what the IRS did, they are doubling the $10,200 subtraction for married filers. Now, the rule is that it's $10,200 per individual on unemployment. So if both spouses were on unemployment, they would get $20,400.
Right.
But the IRS said they didn't have enough time to figure out if one spouse or two spouses or both spouses were on unemployment. So they just gave them up to the $20,400 subtraction. And so that's why people are getting extra.
So here's
but
my problem.
The kicker
here's
is
my problem with it, Chris. So the people that did it right, who did the 10-2, should they amend it and double it?
No.
I mean, you know what I'm saying? That's wrong.
I know. I talked to our software company who talked to the IRS, and the IRS told them, right now, we built it in for mistakes. And they said, well, are people going to have to pay it back? Well, we're not sure. It may be eventually. So we're advising our clients, don't spend the extra money because they are going to probably ask for it back, and they're going to ask for it with interest. Even though it's their fault, they will ask for it back with the interest. So
the exclusion, because after February, they said the first $10,200 per person is going to be tax-free in unemployment. So if you're filing a joint return, it'd be 10-2, and if your spouse got 10-2, which would be $20,400. And so even though your spouse might have only gotten $2,000 in socials in unemployment, they're giving you the full benefit even though you aren't entitled to it.
Right. And
Okay.
But if you call the IRS and say, "Hey, I got too much money," they're going to ask for it back. But if you don't call them,
Because that's wrong for all the people that did it right. You know what I mean?
Right. Yep.
Just
It is
kills me.
terrible. It is terrible.
Okay, so anyway, and the rest of you that I think there's like 53 million people that there's still a backlog at the IRS. So if you haven't gotten your money, hopefully they're going to be moving forward with this. And again, if you had babies in the middle of the year and you're looking for the advanced child tax credit, I think they just are getting so that they can put that on the site. Is that correct?
Not yet. That's still not up yet. We've had 4 calls about. At least I had 4 calls about that last week. Tiff, right? Have you had any where their children, you can't add the children?
Okay. I'm Esther Golias, the tax lady. I mean,
No, I haven't.
for us, it's so frustrating because we want to do things right. We're held by a group of laws, and so we have to follow the law. Unfortunately, they make the laws and they administrate the laws, and there's so much up to their eyeballs and alligators that the refunds are late. People are getting the wrong refunds. It's just completely bizarre. But we will help you. So if you're getting letters, if there's anything that, any bills that you're getting, and by the way, today and this week they've been sending out bills. One of my clients is a pastor at a church, and so some of the people pay their tithes by credit cards. Well, he signed up on the credit card thing that he was the principal of the church, and so he called me this week and he said, "Esther, I got a bill for $14,000 and I don't know what it's from." And upon looking into it, they got the 1099-K form from the credit card company that said there was all this money, and the IRS attributed it to my poor little client who's a pastor, and so we're straightening it out. But when you're getting letters, don't just pay the bill.
Right. Yep, because 75% of the time they're wrong. You may owe a little bit, but you probably won't owe all of it. And then also, if they are right, you probably have to do an amended New York State return too.
Oh, and that's correct. Okay, so I'm Esther Golias, the tax lady, 8030930, 8030930, star 930, and a cell phone. And we have Bob. Hey, Bob, how can we help you?
Hi. Okay, I submitted my question last Sunday, and it said it was submitted, so I don't know.
You mean to our website?
Or if you've got a backlog.
No, we don't have a backlog at all. What was the question, Bob?
Oh, that's strange. It says submitted. Okay, I didn't get my refund yet, my IRS, or my federal refund. It was on a paper return, but it was supposed to be a little over $4,000, and I sent it out on February 6th. Got a notice from the IRS back about the middle of March, just after the middle, that they received it, but they said that it was incomplete because I didn't send a Schedule D.
Okay.
If I send it back with Schedule D and they process it, they'll send out the refund.
So did you send them a new copy with the Schedule D?
I don't need a Schedule D because for years and years I haven't done anything where I have to have a Schedule D.
Okay, so but I'm going to tell you something. When they're asking for something and they know what they're talking about usually, there must be something that they thought triggered the Schedule D, like qualified dividends. So did you comply and do what they said, or did you just send it back or ignore it?
No. I did the same. No, they didn't ask anything about qualifying dividends. They said they lacked a dividend if I agree that I don't that need a Schedule D.
Bob, do you usually get a brokerage statement? Do you get a brokerage statement every year from a broker?
Pardon me?
Do you get a brokerage statement every year?
Yes, and I got my. Okay, I had $4,571 in qualified dividends.
All right, so you needed a Schedule D.
No, they already.
Yes, Bob. You need a Schedule D, because if you have 4571 in qualified dividends, you need a Schedule D, because the Schedule D taxes it at a lower rate.
Yeah.
So the bottom line is, because I want to help you, why don't you call us on Monday and we'll take a look at your tax return. We'll straighten it all out so that you can get your money.
Okay, but I've never had to have a Schedule D.
You always have, you just haven't done it.
I mean,
See, because it would be like saying you should have itemized, but you didn't. Well, they'll let you pay the extra taxes. The nice thing is the IRS said you needed a Schedule D, which means that you're saving money, and that's a good thing. We want you to save money. If you don't do the Schedule D, you overpay.
Yeah, see, I use the capital gain worksheet to figure tax, and I showed that in my statement that I sent back to them, a letter.
Well, since I don't see it, I can't say if you did it right or wrong, but why don't you let us look at the letter? Let's look at your tax return, and we'll see if there's something we can do to help you, okay? And our phone number at the office is 632-7886, 632-7886. There's no charge for us to take a look at it, okay?
Okay, who should I ask for?
You can ask for Tiff or Chris.
Okay, I'll ask for Chris, because I asked for Tiff once, and I wasn't there. She left a message from somebody else to refer me to somebody in Buffalo or something.
Well, we
Maybe
will
Springville.
absolutely help you, okay?
Yeah, because you live in Delavan.
All right, thanks, Bob. Thanks for calling. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. We have a text, Chris?
We do. It says, my daughter still hasn't received her stimulus money from last year. Anything that we can do about that?
Well, what's going on with stimulus money is the IRS is researching every return that said they got stimulus or didn't get the stimulus.
Didn't get stimulus.
So if she put it on it that she didn't receive it and she's waiting for it, they're investigating every return, and it is taking a long time.
There's a big backlog. I'm hoping that they're going to be done before tax season next year. That's my hope, which is like 4 months off.
And then we get to deal with the third stimulus on the tax return.
That's
But
true.
why
That's
don't
true.
we talk about this after
All right, we're
the
going to
break?
take a short break. I'm Esther Gullius, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. And you can text us at 716-803-0930. We'll see you on the other side. Hey, everybody, this is Esther Gullius, the tax lady from EG Tax. You know, I always thought taxes were pretty hard. I mean, it's hard to keep track of all this stuff that they keep changing. We're looking at some ginormous changes coming down the pike, and I have to tell you, I'm not sure exactly what's going to happen, so we can't really tell you. But I can just tell you, you want to listen to Ask the Tax Lady on Saturdays from 3 to 4, because as soon as it breaks, I think the whole thing with this Afghanistan debacle is over. You know, they're going to turn back to changing, passing this infrastructure bill, which has all the taxes embedded in it. So we certainly want to help you. Okay,
I know-
so
wait.
what else should we talk
Oh,
about here
well-
before we get into the meat of my subject here?
Right. I know I wanted to go back to the stimulus because, like, you know, we were saying the first and second stimulus was reconciled on the 2020 tax return. The third stimulus that was in March, it is reconciled.
It will be reconciled.
It will be reconciled on your 2021 tax return. So if you haven't received it yet, you should
You have
receive
a shot at it on your
That's what I
2021
Right.
Yeah.
return.
So,
Right.
and also, let's not forget, too, what's the other thing that's going to be reconciled on this tax return
The
coming?
child care, not child care, the child independent care.
The child tax credit.
Right. You mean the advanced child tax
The
credit
advanced
that people are
child
getting.
tax credit.
Right. But they're they said they're going to send out a form, right?
Right. But the thing is, look how long people are waiting for their stimulus money this year.
Terrible.
So if you're going to just be prepared. If you're going to say you didn't receive your stimulus or you didn't receive an advance, it could delay your refund 3-4 months longer than normal.
Okay, so here's the thing. So you're doing your 2021 tax return. You think you didn't get your stimulus. You put on the tax return you didn't get it. And so they say, okay, we're just going to put you in this special group and we're going to research everything. The bottom line is when you do your return, whether it's done professionally or you do it yourself, you want to make sure that what the information you're putting on your tax return is accurate, which means it may take you an extra week to do your tax return. But that's okay, because that extra week is nothing compared to how long they can hold up your refund because of the information that you put on the return that is wrong.
Yeah, that's what I was going to say. I've had the honor of talking to the IRS, and they said anybody who put on their tax return they didn't get all their stimulus, they automatically put it in another department. That other department is up to their eyeballs. They had no idea how many returns they'd have to check for missing stimulus. And then I was wondering.
And let's talk about our tax school starting again, Tiff. We talked about at the beginning of the hour.
Yep, September 16th, the tax school starts. As you said, that's the first flight. There's another flight that takes off in October. It meets twice a week in the mornings or evenings. The class is
and
free
it is
of
really,
charge.
it's a really great course. I
Yep.
mean, if you just do it personally, it'll make you really a smart person, because people don't know how their taxes are computed, and this will be like fairy dust. You'll go, oh my gosh, I had no idea.
Yeah, and then
okay,
what I
wanted to talk about today,
taxes, our podcast. We just started doing podcasts.
our podcast, yes.
Yep, that's a great way to learn taxes because we're sort of
Dissecting
We're kind of like
each-
teaching people
perusing through the
taxes on our
tax return.
podcast, right?
Yep, we are.
So wherever you listen to podcasts, just listen to EG Tax, and I think you'll find it interesting. It's the three of us, and we're kind of going bit by bit by bit by bit.
Yeah. Yeah.
Right?
As a little
I'm
fun.
Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. Okay, I wanted to talk about itemized deductions, because people don't think they can itemize anymore, but they can.
Right. It's a lot easier for single people than it is for married couples.
So the standard deduction, in other words, what they give you as a write-off without any proof, is $12,400 if you're single on the federal, $8,000 on New York State. If it's a child claimed as a dependent on the parent's return, it's $3,100. That's why many times you see a kid that's working part-time at maybe just kind of a part-time deal, and they make $5,000, and they end up owing taxes because their standard deduction is only $3,100. If you're filing a joint return on the federal, it's $24,800. On the state of New York, it's $16,050, so that's a whole bunch less. And if you're head of the household, it's $18,650 federal and $8,000 New York State. So here's the thing. If you can come up with more itemized deductions than the standard deduction, you save money.
Yep, absolutely. And so it's worth just running the numbers and seeing
It is,
if
absolutely.
Because yeah, there always is. I mean, sometimes for
All right, so I
single
wanted to talk about what is an itemized deductions, the different categories. First of all, one of the first category is medical. And with the higher cost of medical expenses, obviously your medical insurance that you're paying out of pocket is deductible. So is acupuncture, alcohol treatment, ambulances, artificial limbs and teeth, birth control pills, braille books, breast pumps, breast reconstruction due to a mastectomy, camp for disabled children, which can be quite a large deduction because that includes the housing and meals and everything for the kids. Capital improvements for a medical condition. You know, you got to put that walk-in tub or the chair that goes up the side of the to get from the first floor to the second floor. All those kind of things. Maybe you have to do grip rails throughout the house, right? That's all deductible. hand controls for your car due to a disability, diagnostic services, doctor, psychiatrist, fertility enhancement like in vitro fertilization, hearing aids, hospitals, medical insurance premiums, including long-term care insurance that has limits. Lab fees, lead paint removal. You find out you got lead in your house and you got to redo it. That's deductible. Lodging expenses to seek medical attention out of the area, limited to $50 a night. Medical aids, medical premiums, nursing care, nursing home, special education for people with medical conditions, surgery, transportation costs for medical treatment, wigs due to medical condition, plus travel to seek. I mean, and that's not an exhausted list. That's just kind of an overview.
Right. I know I had somebody this week who came in and she's going to go for oxygen rejuvenation of her eye because she's going blind.
Right, and that's deductible.
Yep. But we can go over more medical after.
So we're going to take a short break for the news. We'll be back on the other side with your questions. Hey, to us, your family, and I will tell you, when you are a pickle in the middle and you're getting all kinds of stuff or letters from the IRS, you can call us. We are absolutely there. We want to help you. Don't think if we didn't do your return that we're going to look askance at you. That's not true. We just want to be there as your advocate. So you can go to our website at egtax.com. We're there to help you.
That's right.
Bottom line, right?
Yep. That's for sure.
Okay, so we were kind of talking about medical. There's a text that came in, Tiff, right?
Yep, there's a text that came in, and it reads, you talked about medical. I was a policeman working as a safety coordinator. Can I deduct some of my medical right off my pension on the tax form? My friend who's a policeman does it, and I said I better check.
Okay, so there is something special for people that are in the public health sector, right? But it has to do with their health insurance, right?
That's right. If their health insurance is coming out of their pension as taxable income, then they get to a $3,000 subtraction from income on the page 1 of the 1040 under the pension.
So if you're making $25,000 and they took out $5,000 for health insurance, you can reduce your pension by $3,000, and so only $22,000 of it would be taxable instead of $25,000.
So
right?
your friend is right, and I've done.
Well, it all depends on what his friend is thinking. It's got to be It's got to be insurance, not just medical bills.
Right, that's right.
But then the HSA, that's something we should talk about, right?
Right. Health savings accounts.
Because the health savings account is another medical kind of shelter. If you are somebody covered under a high deductible premium, you can take a large deduction like an IRA as an adjustment to income if you put money into your HSA. Then when you use that money for health needs, the money comes out completely tax-free.
Right.
And do you think people are using HSAs like they should?
No. I mean, they're using them for medical, but I don't think people are loading them up as much as they should.
Because they really aren't sure about them, right?
Right. Because, I mean, the nice thing about HSAs, the money keeps rolling and rolling over
And
year
it
after
turns
year.
into part of your IRA pension.
Right.
Yeah.
And after you hit 65, it basically turns into an IRA.
So you could load up your pension. You could load up if you didn't have, you could load up an IRA if your income was low enough, and if you had high deductible medical premiums, you could also load up your HSA and then use that money for medical expenses completely tax-free. That is a deal. And if you're not aware of how an HSA works, give us a call because we're very happy to help you. It is a great tool in your toolbox.
I have somebody who called me the other day, and she said she didn't put as much as she should have through her employer. So she's going to, because she's over the age of 55, she's going to actually open up her checkbook and put more into her HSA to max it out. And then there's an adjustment to income which is a really nice tool.
Right, and then it reduces, and especially people that are trying to stay under these limitations, like 75 and 150, so you get the maximum advanced child tax credit. It's really important. It's really something you should know something about.
Also,
Okay, yes, sir.
I was going to say also too, maybe you're under 65, but your spouse is on Social Security. It's a good way to keep your income down, to keep the taxability of the Social Security down.
Absolutely, because so many things. This part of the return affects that part of the return, and it's really it's a lot like making vegetable soup. You put a lot of stuff in here and a lot of stuff here, and hopefully it all turns out and tastes really great in the end. So, okay, and I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Our text number is 716-8030930. Okay, so that's medical. I mean, we've done a big swatch over medical, but you have to reduce what you come up with in medical that you're paying for out of pocket by what percentage of your adjusted gross income?
Well, it used to be 7.5%, and I believe it's going back up to 10%.
10%, right.
So
and so if your medical comes up to $15,000 and your income is $100,000, you got to take $10,000 off of the 15, so only 5 ends up being deductible.
correct.
Right?
Yes.
Okay, and by the way, if you can't itemize on the federal because the standard deduction is too high, can you still itemize on the state?
Yes.
That's correct.
Yep.
Right?
Yep.
Okay, then the next part of itemized deduction is taxes. Now they're talking about the limitation for state and local income taxes of $10,000. They're talking about lifting that cap. So that's part of what we'll let you know if they pass that in the in this bill that's in Congress. But right now, the maximum you can pay in state and local income taxes and take it as a deduction would be $10,000,
Yeah.
right?
Whether, sorry, Tiff.
Oh, that's okay. You go.
I was going to say whether you're filing joint or single, the cap is 10,000, and that's
Right.
what makes it easier for single people than married couples.
You mean how
To
what a
itemize.
marriage penalty is, right?
Right.
Yeah, I wanted
Absolutely,
to say
marriage penalty.
that there's a lot of my clients that I itemize on the state and I don't itemize on the federal. But I want to say, New York State, make sure you have all your ducks in a row. You dot your I's and cross your T's. I just had a letter the other day for a young lady who wasn't our client, but she's going to be. And she said she took the child independent care credit and she took it as a deduction, but she paid cash for half of it. And so unfortunately, if you paid cash, New York State won't accept those little receipts. They need checks. And so New York State makes you verify a lot. So make sure you have your proof.
Right, absolutely.
Yeah.
Okay, so as the next area of itemized deduction would be taxes, which would be your property taxes, your state and local income taxes that you pay, foreign taxes that you pay, sales taxes that you pay, right? And all of that is limited to $10,000 right now.
Right, right. And don't forget, if you're a retiree, the sales tax is a big one because you probably don't have state withholding. But if you buy a new car or a boat, your RV, that sales tax
Right,
is a
and
deduction.
everybody's buying boats and RVs right now. There's no doubt
Now,
about that.
on the infrastructure bill that they're tossing around in Congress, are they thinking of getting rid of that cap?
They are
in there?
thinking of getting rid of it, so
The
we'll
salt.
see.
That would be
So
really
we'll
good.
see.
That would
So
be
that's
good.
taxes, okay? And we also have a text that came in.
Yep. It says my accountant incorporated me as an S corp, but I also have a job making a lot of money as a wage earner. I don't like paying fees to New York each year, not to mention the fee to do the return. So should I keep it open? I really haven't done any business since COVID. What's your advice?
Okay, if your business is no longer operating, then I would suggest that you close the corporation unless you know that you're going to reopen the corporation. But there'd be no reason to keep it open because you would have to pay the minimum tax on the state, although it's not a
It's
lot of money.
$25,
But when you combine that with the cost of filing an S corp on the federal and on the state, you might not think it's worth it. So and there's all these fees to get started. So you have to kind of weigh it out. Which's more important to you?
Right,
Yeah.
and then it depends on the type of business. If he's a retailer of any kind, he better make sure he's filing that $0 sales tax return, or because New York State's going to hit him $50 a quarter for each time he's late.
Right,
So
absolutely. So, if in the state of New York, if you are in a business that has to pay sales tax and you don't file the sales tax return, then the state of New York will file one for you and send you a bill even though you don't owe it. And the only way out of it is to do the return.
Yeah.
Yep. Yep.
And
So they like paint you into a corner, whereas if you don't do it, then they're gonna tax you on all this money that you don't owe. The only way to fix it is to actually do the tax return, which is so simple.
yeah, I know New York State is sort of cheap. I know I was doing a Florida registering somebody's S corp for Florida, and Florida charges like $250 a year to register and pay for your corporation. So the New York State is cheaper than some states, right?
in certain
Well,
areas.
we'll talk about that because New York, Florida has no income tax return.
Right.
So
Well, I had to do some Sunny registration for somebody who has a corporation in Florida. They had to pay $250 for their.
each year, or just to get started.
It was each year. I'll show it to you. We'll talk
Yeah, I
about
would
it
like
on
to see
Monday.
that.
Yeah.
Okay, so moving on. So we have medical, we have taxes, then we have interest that's deductible, and that would be mortgage interest on your primary and secondary house, right? And for your personal residence, investment interest, including points, and there's also points that are deductible to acquire the property. That's the next portion of the itemized return, right?
Right. Yep.
And you have to make sure it's for that you use the money to acquire your home or to make home improvements. So if your home is pretty much paid for, maybe you only owe $25,000 and you just refinanced it because the interest rates are so low and took out $100,000 and went on a trip to Tahiti, it's not deductible,
Right. Correct.
right?
Yeah. Now, under the old law, before the Trump tax reforms, you could deduct home equity for.
But you
other
can't now.
reasons. You cannot now.
You can deduct home equity as long as it's tied to
The house.
improvements on your personal residence. But if you took that money out to do anything other than something to acquire or improve your personal residence, you can't take it.
Yeah.
correct?
So you really gotta make sure that you use it to fix that house or do some remodeling or all that good stuff.
Absolutely. Okay, then the next portion of the itemized deduction is charitable contributions,
Right.
right? And this would be payments that you make to any qualified 501c3 or church or synagogue or mosque. That would be deductible. And the other thing that people I don't think are aware of is they can give gifts of appreciated property, and they get the full value at the date of the gift on the fair market value of the property, even though they haven't paid the taxes on it, right?
Right. I mean, yep, your stock, your buildings, you have a rental property you just want to get rid of, something like that.
So let's say you had a $100,000 gain on ABC stock, and if you would have sold it, you would have paid $20,000 with the state of New York, maybe $28,000 in taxes. You give that whole ABC stock to the charity, the entire $100,000 is deductible, even though you didn't pay taxes on it,
Wow.
right?
Yep.
Now, the other thing is many times we see people that say, well, I gave all kinds of non-cash items to charity. How is it that they have to prove that?
Well, if you go on an audit, they actually like to see the slip from Salvation Army or Goodwill, and they've actually asked for pictures and for
An itemized list.
So, and what if the entire amount that I have is worth more? I tell you it's worth $10,000.
Where's your appraisal?
That's exactly right. So if it's over $5,000, you have to attach a copy of an appraisal.
Right.
This would strictly be non-cash.
Correct.
Right.
Or if you donate a car.
All right, I was just going to go that. What if you donate a car or your RV?
You
Well,
can't deduct it until that charity actually sells the car and makes
Or
money,
uses it
or
for their own
uses it
charity.
internally for the. So you need that letter in hand.
If they use it for themselves, they have to send you the appraisal. And that's what you use as your write-off. If they're selling it in charity, like Tiff said, you have to wait till it sells in charity, and then that sale price becomes your charitable donation.
Your charitable deduction.
Yep.
Okay, I'm Esther Golias, the tax lady from EG Tax 8030930. 8030930, star 930 on a cell phone. You can text us at 716-8030930. We'll see you on the other side.
Esther, I got to say, go Bills. They're doing amazing, which is wonderful. We'll see you on the other side.
Make me wanna shout, kick your heels up and shout, throw your hands up and shout, throw your head back and shout. Come on now, the Bills are making it happen.
I mean, I am so proud of the Buffalo Bills. You know, I mean, when you live in a market like Buffalo, it's like it's not a small market, but it's not a big market, and you know, you feel like the underdog, and people will go, "Oh, we're going to Tampa to play." Okay, well, we're going to Buffalo to play. You mean the place where it snows? Yes.
I have the
But
honor.
the best people in the world.
I
right?
have the honor of going to the Miami game with you and Chris and
We are.
some
We're
other
going to
staff.
them as you know, for my staff that works so hard. My senior staff. I said, well, I want to give you something to create a memory. So they said, well, we'd like to go to the Bills Miami game. So we're going down, and we're gonna have our own little part so we can cheer the Bills on, right?
Right.
Yeah, so exciting.
All right. So going back to charity, so it's nonprofit schools, hospitals, volunteer fire companies. You can give money to. You can be a delegate at a church convention. So let's say that you're at the First Baptist Church and they say, Chris, will you go down to the First Baptist Church Convention in Omaha, Nebraska? And if you pay for your own, you get to take those expenses, right?
Right. That's, yeah.
The non-reimbursed
You got
expenses.
Just
All right, so on Tuesdays, I go to bingo faithfully. Can I take my bingo expenses?
yes. No. If you're volunteering at the local church
Right, but
bingo
you can't
hall.
take it if you're playing bingo, right?
There's a text. It says, when you come back, please give the score of the Buffalo Bills game. This is honest to God. Thank you, Mark in Niagara Falls.
19
well, but
to
when
nothing.
we come back to the 19th, it's the 19th of
No,
September.
he means the game today, right now.
Oh,
it's 19,
okay. What is the score right now?
19-0 with 2 minutes left in the
Yeah,
game.
who we playing?
Green Bay.
The Green Bay Packers. Now that's another little market.
That's right. Yep.
I mean, I think they're littler than us, aren't they?
Yes, I probably.
I think they are. I think
Yes.
Green Bay is much smaller than Buffalo.
Yes, but
And actually, it was interesting on the census this year. I saw for the first time in like years and years, Buffalo had an increase. The city of Buffalo had an increase of residents.
That's cool.
Isn't that remarkable?
It is really good. It's a great
Okay.
place to live.
and
It is.
Okay,
so bingo, raffles, and lottery tickets are not deductible. Why?
because that's gambling.
That's exactly right.
Yep.
And we talked about gifts of appreciated property. Okay,
Right.
and
Well, I
so
wanna
the
just
poor
make-
people in New Orleans right now are bracing for a hurricane. And so in a hurricane, that's a horrible situation. And what tax deduction will many of those people get?
Well,
Casualty loss, unless
we
if
hope
they make
not.
it a federal one, it would be taxable.
Well, you
on
know
the
it's going to be
federal.
federal. I think it's already federally declared.
wow. Yeah. So
They're talking about a Cat 4.
Jeez.
wow.
Yeah, they said that this is going to be a life-altering event. So, when a life-altering event comes in that's a federally declared disaster area, as an itemized deduction on your tax return, you get to take a casualty loss. Probably they won't reduce it by 10% of the adjusted gross income. That's what they've been doing,
Right.
So let's say you had a house and it got all blown down, and your insurance company said you didn't have insurance. And now it's hard to believe that if you live in a federally declared, in a area that has hurricanes, that you wouldn't have insurance. But I know a lot of people, my clients in Florida, that don't have insurance because they don't want to pay the high premium, because the premium can be $10,000, $12,000, $14,000 a year
Wow.
because of the hurricanes.
Yep.
So if you had no insurance and the loss was 400, 500,000, that is an itemized deduction.
Right. Well, I know, and I'm just speaking out there that I know last time how insurance companies got away with it in New Orleans, they said it was flood. It wasn't the hurricane damage.
That's
it
true.
was flood damage.
And
So
the insurance company, any which way they can, they don't want to pay.
right. Yep. So just pray for those people down there.
That's for sure.
because-
And that's coming down the pike right now. I think it's 16 years from the landing of Hurricane Katrina.
wow.
So you would take your loss and the cost of demolition, right, all the costs involved, and all of your interior, the whole loss, and you would reduce it by, right now, 10% of your adjusted gross income. Usually they don't take, in a big disaster like that, they don't make you do the floor. That would be deductible. Now, what if you were a New York State resident? Would that still be deductible?
Yes, because the New York return decoupled from the federal, so New York still has that.
But what if it's not a New York State casualty? What if you have a rental property in New Orleans? Would you still be able to take it?
If it's a rental property, there's special things because that's a business asset.
Oh, that's true. But okay. So
but if it was your second
home in New Orleans,
yes,
because you're a New York State resident,
right?
Right.
Yep.
Okay, why don't we go back to the text? What do we got for a text?
Yep. So the text says, Esther, can I write off the property taxes I paid for my son's home because he was quite a bit behind? It's really a sad story.
So what's the overall rule? It says it has to be your bill paid with your money.
That's right.
Right?
That's right.
So it's got to be your bill paid with your money. So this is his bill paid with your money. So it's not deductible.
One of the two things are right.
Well, what he could do is gift his son the money. The son pays the property taxes. Then the son gets to use the property
That's exactly
taxes.
right. Or if the parent were on the title,
Yep.
then it would be his bill paid with his money.
Right. Exactly.
Right? But anytime you're thinking about trying to write something off, it has to be your bill paid with your money. So if your parent is behind the eight ball and you want to pay their taxes for them, or vice versa, they want to pay the taxes for you, they can't write it off because it's not their bill paid with not your money.
Correct.
Right?
Yep.
But here's the thing. So you add up and miscellaneous itemized deductions as well, which would be what kind of things are not subject to 2%?
Gambling losses.
Gambling losses, right?
Yep.
Some business assets that are not covered by a 2% limitation. And the Trump administration, when they had done the tax reform, just kind of decimated that miscellaneous itemized deduction. So business people that used to drive around, still probably drive around, we used to be able to take all of their professional expenses. No longer, because that miscellaneous itemized deduction is no longer allowable. But on New York State,
it's there.
It's there.
Yep.
Right?
Yes.
Okay, let's go to John. Hey, John, how can we help you, sir?
Yes, sir. I have a question on charitable contributions.
Yeah.
When you don't itemize.
Okay.
Now, I understand $300 was the limit in 2000.
Last year. Right.
Right.
Hello?
You got to take a $300 above the board.
Adjustment.
You're right. And this year, for married couples only, it's going up to $600.
If you gave $600, they'll let you take $600.
On the New York.
On New York.
The federal.
No, on the federal.
Federal? What about
Right.
New York?
Nope. New York doesn't have that above the board deduction.
But New York will allow you to itemize.
Okay.
So, like, let's say that your itemized deductions on New York are over 18, you would take it not as an adjustment, but you'll take it as an itemized deduction. Now, are you single or married?
We're married, both of us.
Are you over the age of 72?
I'm 85 years old.
All right, so something you might want to do you take money out of your IRA or pension or annuity every year?
Yes.
So you could do what's called a direct charitable rollover, and you could take, let's say that you want to give to St. Peter and Paul's Church $2,000. When you're taking out your RMD out of your IRA, just designate that portion that you want to go to the church, and they will transfer it from your IRA to the church, and that would make it fully tax-free.
Okay.
Okay?
I don't itemize on a federal.
You don't have to itemize to do this.
Okay.
All right? This is called a qualified charitable rollover.
Okay.
And so basically you talk to your whoever is handling your IRAs or annuities, and you say, "Hi, it's Christmas time, and I want to do my RMD, and I'm supposed to take out 8,000, but 2,000 I'd like to go to St. Peter and Paul." And so your IRA administrator will send you 6 and send 2 to the church, and that 2 is not taxable at all.
Now, you could, on a federal, we file joint. On a state, we file separately
Why?
because we don't have earned income.
You don't file separately on the state. You file jointly on the state.
Pardon me?
You should file jointly on the
And you
state.
just probably pay no taxes, right?
Right.
But they're filing jointly. You wouldn't pay taxes either.
Probably.
Well, that's
Probably.
What is the maximum deduction for IRA on the New York?
Each one of you, the first $20,000 that you receive in pensions or annuities, non-New York State, federal, or local, is going to be $20,000.
20,000 each.
Each one of you,
Okay, so
and you don't have to file separately to do that.
yes, 40,000 total.
If as
20,000 apiece.
as long as each person took out 20,000
So, like,
or more.
let's say that you have a pension of 22,000, and your wife has a pension of 18,000. Then you would get $20,000 subtraction on the first 20,000 you receive, and your wife would get 18,000 because it's up to 20,000 for her. So you would take out 20. You'd be 38,000 would be the deductible portion of the pensions.
Fine.
Okay.
Single.
Yeah, give us a call, John,
All right,
at the
call us
office.
because we'll be very happy to help you. Hey, until next week, if you want to go to our website at egtax.com, if you're getting letters, if you're frustrated, wondering where the heck your money is, we'd like to know where the heck it is too. We certainly will help you. We'll make those phone calls for you. If you're getting letters, don't pay it until you let us look at it. Until next week, I'm Esther Gilius, the Tax Lady, with Christopher Fabian, Tiffany Fabian. Have a great week. God bless you, and go Bills.